All right. Hey there, it's Sam. Midday here. We're November 16th, and I had a few members interested in taking a look at IOTA, or Internet of Things. And I think there's some interesting things here to take a look at. Now, I've got it up here on Bitfinex. This is the 4-hour IOTA to Bitcoin. Now, U.S. traders, this is you don't have access to Bitfinex, but you can get access to IOTA on Binance. I've recently opened an account there. It seems like a good exchange, and if you wanted to get access to this coin, that's where you can do it if you're in the U.S. So, just taking a look at it here. First thing, of course, if you're not familiar with this coin, the thing I always suggest that you do is go over to CoinGecko and take a look at it and learn a little bit about it, right? So, I always tell you to look for coins with a score of 50 or higher. And you can see here it scores very highly at 66. It's got a market cap of 2.2, almost 2.3 billion. This is a major crypto, right? It's a very interesting story. I would encourage you to go through this and learn a little bit about it. You can go to their website right here, the very cool website. But an interesting story fundamentally. Looks like this is certainly a contender to be around for the long term. If we go over here to our list on TradingView, you can see, we're in the top 10 here. 1, 2, 3, 4, 5, 7th largest by market cap relative to the dollar. So, 2.3 billion. And relative to the dollar, it's on the move today. Relative to Bitcoin, also up today. So let's go take a look at it and see if there's anything to learn, if there are any opportunities here. So, if you bring it up for the first time, and you look at this, well, okay, so clearly you've got some sort of three-wave thing happening here. So the first thing I'm going to do is just go check that out and see, is it trading technically? If I can get it to turn on here. So I'd go swing high to low. Okay, that gets my attention. So we get front run here at the 50 and ends up going right to target here, one more little pop up and then down again. So to and through target, and then we've had this reaction here. So potentially we have the start of a new trend. So if I take that off and we look at this here, well, you might, first glance go, oh, well, it looks like we might have some sort of Elliott wave count there. I can see potentially a 5-wave structure. Well, let's take a look at it. So let's go down to the hourly. And let's blow it up a little bit. So to someone who, well, let me put it this way, to someone who's just learning Elliott wave or just getting familiar with how to trade it, particularly here in crypto, your eyes is going to come to this and your first glance is going to be, oh, okay, well, here's my impulse, here's my 4, so looks like impulse correction into my 4 and I'm up for my 5. So, maybe this is 1, 2, 3, 4, 5. Well, as I will often tell you, one of the advantages, one of the real advantages of working with the Elliott wave methodology is that it gives you a rule set to quantify and qualify your labeling. And that will be advantageous to you relative to where you are in that count. That relates to retracements and high probability zones for entries on retracements, as well as targets for high probability to reach high probability targets where you might be tightening a stop or taking a partial profit. But you got to get the count right, otherwise the market's going to either punish you for not taking the time to do the work to get the labeling right, or you're going to get out way too early because you have it mislabeled, or you're going to ride something down too far, again, because you have it mislabeled. So let's just take a look here and see if we can qualify this. So again, for someone who's just getting started, you might look at this and go, well, there's some sort of, I don't know, looks like a double bottom down here. So here's my 1, 2, 3, 4, and I'm putting in some sort of 5. Well, let's see if we can qualify this per the Elliott rule set that we know. And first part of that rule set, for an impulsive wave, we know that the third wave cannot be the shortest wave. So if I were going to pull here from this low and say, okay, well, there's my 1, here's my 2, oh, well, immediately I got a problem. Because if that's 1, 2, my third wave is shorter than my first wave. Now, potentially, we could have the fifth wave be shorter than the third wave. But for a good count, particularly when you're looking at establishing a new trend here, you want to get the count right here, and you want to be sure that you're not mislabeling here, because that's going to throw you off pretty dramatically when you're looking at retracements, and then again, as it relates to upside targets. So we could measure again, and we could look from here and see one. Okay, well, yet again, we haven't gone up here. Now, we could still be rolling, but I would propose to you that by doing a little bit of work and looking at the structure within the waves within the waves, right, the fractal nature of Elliott wave, you can be more precise in where we are, and I think you'll find that there will be real advantage to that with regards to where IOTA could be going. So let me take that off and take you over to where I've already done the labeling. And we'll take a look at that. Now, here it is on the hourly, same chart. Okay, so I would encourage you, let me push this off to the side, and we'll take it from where we started the new trend. So rather than just be lazy and say, okay, well, it's a double bottom, I would encourage you to be more deliberate with regards to looking at these pivots to see, do we have any qualification or disqualification. So here's the first little push up, and then we come back down. But the low, this pivot here does not take out this low here. Does not take it out. So I would propose to you that what you have here is a one wave and then a three wave correction into a very deep two. So we get that ABC into a second wave. Yeah, I know that's low, and looking at it, yes, you would call that a double bottom. But since it doesn't take out this low, I maintain that here is your one wave and this is your corrective two, and then we start up into a third. Okay, so let's look at that. So you have the advantage here of being able to qualify these because you can see the subdivision within each one of these waves. So if we look here, if that's my one and this is my two, then I would expect an impulsive wave count within my third. And I can see that we get that nice subdivision here, just as you'd expect. And in fact, you're getting subdivision. I'm here on the hourly. If you take it down to the 15-minute, you can get even more subdivision. So you get a great 1, 2, 3, 4, 5 into the one, a shallow two here. Probably not another one, but that's your first shallow two. But it qualifies. So if I grab my fib tool here, and I'm assuming that's my two low, and this is my first one, well, we get between the 23.6 and the 38. So while it's a lower percentage of the time that you get a two that's that shallow, if we go over here to our little statistical analysis for wave twos, we can see that 12% of the time, so it's not unheard of, the second wave will retrace within the 23 and the 38, right? So it's a very shallow. It's not the norm. The majority of wave twos will be between the 50 and the 618 or the 62. Some will go deeper, right? So our first one will go, as we're looking at over here, our first one has gone very deep. In fact, almost 100%, but it does not get there. This is our shallow two. Then we get additional subdivision into a 3. There's our 4. Doesn't. Let's check it. See if we're moving technically. So let me pull this off. So if that's my 1, 2, let's look at that 2. Get it to my 3. We go to the between the 38 and the 50. High probability range for my fourth wave. We go all the way up, and we're just a few ticks shy of the negative 100% for my fifth, which gives me a completed impulsive structure that I can now label as my third. One in green here. 1, deep 2. There's my 3. Then I'm looking for a fourth. So just do just as I always show you, we pull from the 2 to the 3 high, and again it's shallow. I get a triangle here. I get an A, B, C, D, E into this 4. We're between the 23.6 and the 38. Again, a little shallow. This pivot potentially would have been support here. So we did not catch this. Or let me rephrase. I did not catch that. right? So this was something that some of my members have been interested in. So I was really not tracking this, but I can do the analysis for you and show you that this is we have high probability of this count being good. So we get this triangle action here that you will often see in a fourth, and then we break out of it. There's our one wave going up to start our fifth. So we're getting excellent subdivisions. So we have technical Elliott wave trading. We've got a strong market because we're getting shallow retracements. So let me pull that off and take a look where we go. From this 3 to the 4, we go right to the negative 618. So here's the first algo target, negative 23. We stall a little bit there. Retrace, and note we get subdivision here, but we end up going to the extreme for an algo target. We get the negative 618 almost to the tick. I think it goes one tick through it. So that tells me algos are in, and we've got technical trading. So, excuse me. Given that subdivision, given that precision in that pivot here at the negative 618, I can clearly label here that I've got a 1, 2, 3, 4, 5 that's now topped. So pulling that off, so let's pull some of this down. Given that that's a completed 5-wave structure with this excellent subdivision, I can now call this my 1 wave. Well, now of course, now I'm looking for my 2. So pulling from now, I go all the way to my absolute low because I'm retracing the entire 5-wave structure. Well, yet again, I get a shallow 2. So again, as we just saw here on our statistical analysis, 12% will be between the 38 and the 50. So again, it's not unheard of. And we're getting nice technical support here from the Vegas wave. We literally go into the pocket of the Vegas wave. It's just amazing how accurate that can be. So there's our nice ABC subdivision into a shallow second wave. Okay, so here's why this matters. So to the unskilled or the untrained or the uneducated in Elliott trading, they're trading this as a 3, 4, 5. Right, we're trading this as a 1, 2. Well, why does that matter, right? I mean, so either way, if you're a buyer here, you're making money. Well, if that's going to be a 3 wave, then that changes our projections pretty dramatically. So let me scrunch this up. So if I've got a 1, 2, well, what am I looking for my third wave? Well, I know for sure if it's going to be a third wave, it's got to go at least 100% of the 1 wave. And that's here, this maroon. So if I wiggle it there, you see that maroon line there? That's 100% of the wave 1 of this completed 5-wave structure. Shallow 2, I got to go at least 100% to qualify this as a 3. So I've got a good target here. So if that's my 3, well, now I know to be expecting subdivision, just like we had here into this third. I'm expecting subdivision to give me a 5-wave count. So you can see the subdivision already starting here. I'm going to take that to a smaller degree, of course. So let me take that down. Let's go to minuet. That'll work. So potentially here, now this is where it matters that you know what kind of where you are in the wave count. If I've got a good 1, 2 and I'm putting in a 3, well, I can start to measure that again because now I'm looking for entry because now I know I've got a market that's trading technically, algos are in, and I'm getting good subdivision for Elliott trading, which lets me be precise about where I'm looking for entry. So I can start measuring here. So I can say, okay, if that's my 1 and I can do that. Well, then look here. We go exactly to the 1618. That's the highest probability zone for my third wave. So if I can get it here, if I was going to project the roadmap and say, well, highest probability would be the third wave goes to 1618. We literally just ticked it. While I'm recording this, we're ticking that 1618. Good. All right. That tells me again, it's trading technically. Well, now I can do I can start approaching this for a new trade. So I'm going to take this off since I'm confident that I've got potentially a good 3 there. Well, nothing says it couldn't keep going, but I've got a good potential third there. I've got a good potential second here, so I can pull this up and look for my 4th. So I've got a potential trade setting up. Right here, here's the pocket that we look for in a 4th, right? So if you thought that was the 5th, you've got it mislabeled. So if you think that's 3, 4, 5, you're now looking for a retracement of the entire thing, rather than your next opportunity to get in the wave count here to get up for, this could be the 1 of the third. Right, so it's important that you identify where you are in the count so you have some sense of where the high probability entry zones are and where the upside targets are. Right? Otherwise, you're either taking too much risk in riding it down, getting stopped out along the way, or you're getting out way too soon before you've reached the probable targets. So it takes more work, it takes more time to do this subdivision here and label it. It takes more insight and more education as to how to label the waves. That's much of what we do within my group here, within my Discord with my Discord members. So this is exactly how we approach this, and now we look for this as a potential entry here for a 4th to a 5th, knowing that well could be just the first wave of the third wave. Well, how does that all play relative to the larger degree? Where are we in the larger degree? Well, let's go out to the 4 hour and see if any of that makes sense. Okay, so let me rescale this. Well, remember when we first brought this up, if I scrunch it up here, from my swing high, because I've got a complete, remember we hit those targets down here? From my absolute high to my absolute low, I'm just getting rolling here. So here's my 50. So if I'm going to get to 100% in my third, right? So if I open that up, and you can see the 50% is, here's the red. So these are the likely resistance zones that I'm going to hit on the way up. There's the 50, there's the 618, 65 pocket. Now look how that lines up. Here's my 100%, so I get this little box here, a tight little box, where I get this confluence. So I've got my 100% of my wave 1. I'm here thinking I've got a 3, potentially a 4. Certainly this could just be getting started, but to qualify it as a third wave, relative to the 1, I've got to at least get to this little pocket here. So then I can call it a third. But remember, a third, that's just the initial qualification. The higher target for the third is up here. Remember, just as we just hit, the higher probability for my third is up at the 1618. So if that's going to go, this may just be the 1 of the third that I'm in right here, because I've got targets way up here relative to this 1, 2. Do you see that? So this is the first place. So this becomes a likely place to be taking perhaps some partial profit. If we're going to get, assuming we get the entry here, because this could just keep going right here. Nothing says we have to come back down. So this could keep going. For all we know, the third ends. We could have the third right here. So again, it's you're continually relabeling your count relative to what the market is showing you. So nothing says that we stop here just because we hit the 1618 on the smaller degree. This could just keep rolling. And we could put in a 1, 2, and a big 3, 4, 5 to get up here. So I guess hopefully you're getting the point there. The idea is be precise in your labeling. Be willing and quick to relabel given on what you're seeing in the market, and that gives you the roadmap, right? So it's those times when you're forecasting that potential roadmap and you've got it right and it's ticking off on all the high probability zones, that's when that's your opportunity to really make money, because the market is following the highest probability pivots and turns. That's when you can comfortably add with house money because you're already in profit. Be a little more aggressive. It's following the roadmap rather precisely. So that gives you more confidence, and additionally, it knows where the count is invalidated. So if I'm going to get an impulsive wave here, which I'm expecting in my third wave, well, I certainly don't want my wave 1 high taken out. So I can be confident being a buyer here in this zone for a potential fourth if I get the opportunity to do it. If I go back down here to the 1 hour, if I get that opportunity to be a buyer here, I can be a little more aggressive knowing that I've got my stop down here because this count gets disqualified if I take out that 1 wave. Do you see that? So it's that rule set that is so helpful to you if you're using Elliott Wave and trying to trade crypto. Where am I wrong? That's always the first question. Where does the market prove my count, my roadmap is inaccurate? It's wrong. Something else is happening. Now, we could, if this is a one wave of the third, we could get a diagonal here. Nothing says we couldn't. But I'm sure as hell I'm looking for my next entry here on this high probability zone for a fourth, because I got some big targets up here. Here's my 1618 off of this one. Do you see that? So I encourage you, if you don't know how, join us in the room and learn how, because you'll have, I think, much better success and not be putting yourself in positions where you're taking bigger losers than you need to, right? It's this precision and knowing when your count is invalidated that keeps you from taking the drawdown where you're just, you think you're speculating and all of a sudden you're becoming an investor. You're a holder, right? Because you didn't have the discipline or the knowledge to know where to get out of the market. All right. Okay, guys, I'll wrap it there.